Joining me now to discuss the equities and fixed income market is David Alo, and he's a trader at Stanbic IBTC. David, thanks for joining us on the show today.
Hi, Didi.
Hello. Now, let's start with the fixed income space, David. It looks like we're seeing a change in trends with yields edging upwards. So talk us through what's going on there.
Yeah, we have seen yields increase in the last 2 weeks thereabout, and this is across the short end of the market as well as the long end of the market. So in the bond market, we've seen yields increase, but I think largely it's due to effective monetary policy of CBN. Really, on the headline, much hasn't changed. The MPR, CRR all remain unchanged, but we are seeing changes or movement in monetary policy indirectly through the use of OMO. So in the last OMO auction, we saw yields increase, and obviously that's filtered through to the market as well. Another driver is foreign inflows into the bond market are sort of reduced in recent times as well. Obviously, we all know what happened with the inclusion of the JP Morgan index. We saw a lot of foreign investors coming to the Nigerian markets, take advantage of the higher yields. But obviously, what we're seeing now is that demand sort of reduced a little. At the end of this month, we should see the Barclays index as well include Nigeria. However, we don't think that's going to have a significant impact. We believe that that impact is going to be muted as well going forward. But I think as inflation begins to decrease, we should see yields decline even further. We don't think it's a trend reversal. I think it's more of a pullback. There's an opportunity for investors who are yet to get into this market to pile on and buy some more bonds.
Okay, now you mentioned the Barclays index, and you said you don't feel that there will be much of a market reaction to that. Can you give us some more detail as to why you feel that way?
Okay, most portfolio managers, index funds and discretionary managers tend to use the JP Morgan index as their benchmark. The Barclays index is also popular. However, what you would find is that upon inclusion, then these professional investors need to sort out a lot of their internal issues, get internal approvals, sort out their limits and their guidelines, open custody accounts, particularly for those who are new to investing in Nigeria. So that's going to take a while before some of these investors start coming to the market as well. So from that point of view, I don't think it's going to have an immediate impact. I think anywhere 6 months to 12 months. Okay.
Now let's move on to the Naira. I mean, we've seen the Naira weaken over the past few trading sessions. Yesterday we saw interbank rates close the day largely flat at 158 Naira, 158.25 to the dollar, and that's riding on increased supply at the FX auction. It'd be good to know where you feel the Naira is headed, generally speaking.
Well, if you remember, Nigeria, the Naira appreciated to about 156 levels on the back of strong inflows from foreign investors. Now that we're seeing that demand reduce, I believe that the Naira will remain within the band. However, we should remain around 158, 159, 160 levels. In my opinion, I don't think we're going to see a devaluation. Obviously, the CBN governor has done well to keep the Naira stable and sort of build confidence in that. With him leaving in May 2014, I think you want to keep that keep that legacy. I think you're going to see foreign inflows remain stable as well. I think the oil prices should remain stable as well. At the end of the day, you've got enough issues going on in the world with Syria and Iran, to keep oil prices at current levels. So generally, we think the fundamentals are strong, and we think the Naira should remain stable at where it is, 158 to 160 levels.
Okay, now let's quickly move on to the equity space. Yesterday, we saw the index close in the red. equities trading sideways for most of the day. It appears that most investors are adopting a wait and watch approach. They're trying to see what will happen when the results start to filter in. Of course, we've been expecting that now for literally the past 3 weeks. Hopefully we'll get something from the financial sector. So it'll be interesting to know your expectations for the upcoming results that we are going to be receiving soon.
Right. We think the results are going to be positive. We don't expect any negative surprises. If you remember, well, this is the first full year of IFRS really that these banks are going to sort of present to the investing public. I think that's what's led to a bit of delay in the release of results so far, particularly in the financial sector or segment of the market. Generally, we think the results are going to be positive in that sector. For the fast-moving consumer goods, we're already seeing 1 or 2 results being published, and I think that they've also been positive as well, generally. And I think that would continue going forward. And I think most investors are already positioned to take advantage of any rally, and some of this rally is already priced in already as well. If you recall, about two weeks ago, we had a pullback in the market, and a lot of investors sort of used that as an opportunity as a buying opportunity. Okay. I think we should see good results going forward.